Hello, everyone. Welcome to today's session. Sorry for that delay. Let's jump right into it here. Let's talk market conditions here currently. As we know, we're still towards the upper end of that range. The long-term bullish trend we have been working on now for about a year or more, going all the way back to October of 2022, and then working this way up. Essentially this bottom that we had right here and this crossover point, red going to green, is sitting right here. So we've been rallying pretty nicely for about a year and a half, which has been great. Now the question is, how much higher do we go? Do we go any higher? Do we pause right here? Do we, what do we have coming? Obviously, I wish I knew what the future looked like, but in terms of where we're at, essentially all we can do is look to see where we're at currently and what are those current trends, and are we in a trend or are we at an extreme end of a trend? We definitely are in both. We've had a nice long uptrend. We're at the extreme of that uptrend. But there's been a lot of really good things happening, a lot of good news happening. The biggest issue is just interest rates and inflation. Those seem to be really still the big sticking points and talking points right here, and that's probably going to continue to be the case. So we're seeing momentum, which had been quite volatile, up in this extreme range and then back into the bullish trending range. That's where we're at now, and markets the last couple of days have been moving higher. Overall breadth is of all things probably still the most concerning part of this rally. We typically don't want to see the market moving higher and the breadth of that market dropping. That just means that there's less and less participants in this, which means that there's only a handful of players that are moving the market higher. That's not a healthy uptrend or a sustainable uptrend. And that's not uncommon for a market top to start to have that happen as profit taking starts to happen, or you get in sector rotation. There's a lot of things that can happen in that. And also sentiment is still quite bullish. Complacency here. We saw a bit of a tick yesterday, two days ago on the VIX. If we look at this one right here, this is VXY, which is an ETF for VIX. It spiked up when the market dropped the other day, and then was just playing with us a little bit here, and then retracing back down once again. So volatility, with the VIX. In this case, it's representing VIX. The VIX is the extrinsic value of S&P 500 futures, or excuse me, options contracts, and so and put options contracts as well. So when you see a spike happening like this, you'll typically see it's fear-based put buying, and we saw that for a day, and that just didn't last very long. So we're not looking for an exact signal in some of these things. We're just looking for some additional clues to say, are we starting to weaken? What do we need to see in order for this market to go higher, to go lower? And the fact that this is just as low as it's been in a long, long time, we know that we're going to get some volatility here eventually. The question is just when and just how much are we going to be dealing with and focused on. Let's look at sectors here. We've had sectors which have been moving pretty, some volatility here among several of these sectors. Basic materials, real estate, consumer goods have been floundering towards the bottom end of this range. And we have seen utilities, which are starting to find some support right here as well. Now, some of these sectors that have not been participating may start to participate. That can also happen with breadth, where we just get additional moves, maybe some corrections that have taken place in certain sectors, and now they start to come alive a little bit here as well. The overall leaders in this uptrend still construction, aerospace, utilities. Utilities has still got a strong rank, but you can see now just a lot more sells. The buy-sell ratio here happening. We are seeing some buy-sell ratios which are still positive in a couple of different areas. Construction has been an interesting sector, still moving strongly. Let's take a look and see on some of these stocks what those patterns look like, because some of these construction stocks have had, the last 2 days, 3 days we had, see if we can find a couple. Toll Brothers was a good example, where we had this big confirmation bar, and then we had that S&P day that was selling, gapped lower, and now it's moving back up again. So we'll see if some of these patterns and some of these confirmation bars end up holding. We saw some nice ones here in that construction space, and they gave it all back, and now they're working toward on more upside. So not, there's some skittishness in the market. There's a sense of some of that starting to happen where you're just not having as much confidence in this overall uptrend. But that being the case, it's not over yet. We're still seeing some nice moves higher. We want to continue to participate in that as long as we possibly can. And then let's look at a couple of the commodities areas as well. The oil fund, USO, starting to work this way higher. This has been kind of a long, drawn out process, but we started to see higher lows through here. That's essentially starting to trend this direction. So now we're getting some momentum to this upside. If we can clear this $73 range, that might push oil back up above. This is a pretty significant resistance area. And as you know, I'm going to cheer the other direction. I would like to see oil dropping and be able to have a little bit cheaper gas tank. But who knows what is going to happen there. But oil, nonetheless, is starting to find some support. Let's look at a couple of other stocks, and then just as kind of a summary of market conditions, the buy-sell ratio is a good example of what's been happening this last few days. It just doesn't know what it wants to do, which direction it wants to go. It's really a flat line in terms of overall market participation at 0.93 currently on the buy-sell ratio. Let's look at what's working right now, because we are seeing, so one of the quick ways to glance through and go through to see some of the ideas that are working are the muscle stocks group list. These are stocks that have been, these are the best of the best. I should say these are the best performing stocks, and obviously you're going to see some names in here like NVIDIA, which has had a really nice uptrend here, seeing stocks like MicroStrategy, which is also a crypto play and getting some moves to the upside. We're also seeing a whole bunch of crypto miners. We're seeing more in the new buys list, and we're seeing Coinbase as well, CIFR. They're extremely volatile, and whether or not some of these are going to continue to move to the upside, that'll be the question right here. We also saw Coinbase, which is also getting a new uptrend here. A lot of these have just really spiked aggressively off the bottom. So Coinbase is essentially a broker for cryptocurrency, and because the Bitcoin has been moving higher again, you're starting to see cryptos come back to life. So you're seeing the miners, the Bitcoin miners, starting to move, and you're also seeing Coinbase starting to move, which makes sense. So keep an eye on some of those. There may be some additional opportunities. The one that we have currently in the portfolio is, well, let me just jump over here because we have MARA, that is a crypto stock, and see if we've got here. So it's had some volatility the last couple of days. Big move higher yesterday, gap back down here as again. We'll see what kind of confirmation we get on this stock if we get some moving forward. It's a trend that is appearing to be a lot more sustainable, with Bitcoin pushing 50,000, markets kind of topping out. It's been a long time, not a long time, but 2 years, 2.5 years since we really had the kind of the crypto fiasco and fraud with FTX and things that were happening there. So it seems like the market might be settling down a little bit for some opportunities there as well. And as far as we are concerned in terms of what we're looking for, we're just going to utilize either an ETF or utilize some of these other stocks or mining stocks to be able to take advantage of that. There are ETFs that you can also consider, like, for example, this blockchain BKCH, which is, I don't know exactly what it has. You can go out and do a little bit more research, but there are ETFs that are covering groups of these stocks or following the cryptocurrency itself. So if you don't want to go out and try and open a crypto account, or if you don't have one or you don't want to fiddle with it, then there are more and more ways now through ETFs to be able to participate. For example, BITO, I think this is Bitcoin a Bitcoin ETF to be able to participate in those kind of moves here. And you've seen Bitcoin essentially up about, about 80% here over the last 12 months. So it's kind of been this stealth move. Not a whole lot has been talked, it hasn't been talked about a whole lot, but Bitcoin and cryptocurrencies are continuing to move. I like this list. It's a good way also to just kind of get just an idea of maybe what some of the sectors that are moving. Certainly seen semiconductors move well, and it's continued to have that overall uptrend. We did see AMD, which popped into the new buy list, I believe down right here. AMD, nice looking pattern here as well, where you have back up into going from this hold up in the momentum zone, still holding this 236 area. You can see 1, 2, 3 areas of support and a new buy signal here. Not a whole lot, relatively muted on that bar today, but that could see AMD could be a chip maker that gets some continued upside as well, along with NVIDIA. They're a little bit later in the trend here, but we could see some continuation. If the markets start to retrace and start to pull back here, we more than likely going to see some of these stocks start to fail. And remember that in that overall uptrend, what we're focusing on is we're looking for stocks that are moving, that are just continuing to move this direction. And we have a few different lines in the sand that we can utilize. One of them is this 236. I had a question earlier about how do I get the 236 line onto my chart, and the default is the button is just right here. If you click on that button, it'll pull up your setting. The default, I think, is just this 38250,618. So all you have to do is just check box that and either update that to 236 or create that as 236. If you do clear your cache or your cookies, that goes back to default. It's cookie based. And so sometimes if it resets, that's probably why, but that's the way to be able to add that 236. It's a really effective Fibonacci ratio. I mean, technically you could just call it 25%, but we're using these we're using these Fibonacci numbers, which is very effective as well. But you can see it didn't move it a whole lot, but it's that range, it's that upper quarter of the chart that we want to play with. 236, I'll add that back in there as well. You can see it just didn't move it a whole lot. So that upper quarter of the chart creates a good momentum trend location, and that's just a good example of how to be able to focus on that. And really, we're focused on this piece. This is the most important part of the chart pattern. This has already happened. Yes, we haven't had a big move higher, but as long as that trend is still moving and moving higher, that can be considered a continuation of an upward trending stock. What we want to start to focus on in terms of adding, you could certainly add into a stock like this, but risk profile and risk parameter is what becomes the most important part. So if you're adding into new positions, it's how am I doing that at the portfolio level? Am I adding large positions of 10%, 5%, 2%? Have a plan for that, and as far as adding into that. Right now, most of these I'm still adding right around 2 to 2.5%, closer to the 2% side. So some of these newer positions are a little bit smaller holdings, and about half the cash currently towards the upper end of this trend. So that's in fact, we get a huge amount of volatility in trading, and it just is it's just the way that it works, and it's frustrating and it's unfortunate, but we have to be able to prepare for it. A good case is our trade this morning. Let me go to, it was INOD. Immediately at the open, it immediately started retracing and stop out, okay, and a big move lower. So this is one of the reasons why we want to make sure that we have a stop loss in place, make sure that we have the risk profile set up so that when we have our trade, we're setting it up, we have a stop loss just for this exact scenario, and we get stopped out. Now remember, this is a 23% drop. Now that can hurt. If I would have had a large position in this, that's extremely painful. And we're playing with stocks that can do this, that can move quickly to the upside, quickly to the downside, really volatile type stocks. All stocks have that possibility, even if it's Home Depot or Walmart or, Costco or, even Google and Apple have had big gaps lower and big moves lower this at some point in the last 2 or 3 months. It can happen. And so saying I'm going to buy this stock and this is the one and only stock I'm going to buy and I'm going to put a bunch of money into it is just asking for a disaster. Instead, it's frustrating, but this is just, it's not a big deal. We get stopped out. We were down, about $300, I think, on this. So it was about that 0.3 of 1%. So in terms of the overall portfolio amount, it was really nothing. It really didn't do anything. Yes, it was frustrating. Yes, I would have rather had something else that was working, but it can also act as some clues sometimes to be like, man, some of these trades are not working. We're getting stopped out. The ones that we have are continuing to do pretty well. We've got OSCR, which is up 90% now and having another nice move today. We want to continue to let those do their thing, but every once in a while we're gonna get into a trade that we think is going to look like this and move higher. Okay, that's the expectation every single time, but there's times when we just flat out just get a dud. It's just a dud, and there's no way around it. And there's nothing we can do. And so we've done our job. And I say that in terms of what we can do. We can only decide our position size, how many shares we're buying, and where our stop loss is. And the market's going to do what the market does. And in this case, it went the other direction. We've had a few that have gone this direction. And once they move that direction, we want them to continue to move. When they do this, we're done. I'm done playing with that. It didn't last very long. It lasted, they lasted about 25 minutes this morning, and we immediately got stopped out. So it stinks, but it's just a part of the deal. So making sure that when you're allocating into new trades, you also have that same feeling. If I'm down 25% on one trade, what does that look like for my account? Is it extremely painful? Is it catastrophic? It shouldn't be, and it should never be. And that's a part of the reason why I harp on risk management so much, because we want to be able, when we're trading a little bit more aggressively, this is an aggressive strategy in that we're adding a lot of trades. It's a lot to manage. But in terms of the size of the position, how many shares, we're relatively low risk, relatively conservative on that approach, but we need big winners in order for it to work, and we need to cut our stops and cut our losers really quickly. And that's essentially what we do in this portfolio. This market top right here, I shouldn't say market top, but we're at the upper end of this range. It's going to start to present some clues. Some stocks are going to continue to work, some are not. We're going to continue to focus on the ones that work. So again, just a little plug there for risk management. You know that my approach, and there's lots of ways to do it, but the main approach is between 2 and 2.5% percent allocation. So if I have 100,000, that means 2% is $2,000. That is not 2,000 at risk. That is a $2,000 position. Okay, and that some may argue with that and say that's too small. You're not getting enough bang for your buck. Well, then they can manage their portfolio how they want to manage it, I suppose. But in this case, it's about, for a lot of you that are just starting out and learning and want to be able to manage a portfolio and manage trades and manage these kind of stocks. These are the kind of stocks, who wants a stock that doesn't have the potential to move 100% in 6 weeks? I'm not super interested in those kind of stocks. I want some volatility. I want a stock that has this potential to be able to move pretty quickly in a short amount of time. And some of the, once they work, they work. If they don't, they don't. Some of them flounder and get stuck right here in the middle, and have yet to have some of those moves higher. And some don't. They just flat out don't ever work. They stop out, or they have a small gain, or we just have a time stop. A time stop is, for example, NXC. NXC is kind of approaching my time stop, where we bought it. I think we bought it right here on this new buy, and the stop loss is just down below this level, but it hasn't done anything in 2 weeks, 2.5 weeks that we've owned it. So what do we do? Do we bail on it? Do we wait on it? We haven't been stopped out. We haven't had our gain. It's just tying up cash. It's in this area. It's in this mining, basic materials sector that when mining and oil and gold and precious metals, all these things, prices are moving higher. it looked like it had an opportunity to move higher, but it hasn't done that yet. So do we bail on it, cut our losses while we still can, and move on to something else that may be more effective? I do that. In fact, we did it on DNN yesterday. DNN sold that yesterday. It was almost identical, almost an identical chart pattern to NXE. So NXE is getting there as well. So we don't have to hold something just because we bought it. A part of the rules are, we know that the rule is I have a stop loss in place that's managing my risk, and the position size was already established as far as the 2% or 2.5%. That's a given. We're setting that up no matter what. We're setting a stop loss up no matter what. The audible is, all right, do we change? Do we get rid of this? If we're going to want to raise additional cash, excuse me, this is the first place I want to look. I want to look at losers, number one, that haven't been stopped out, and then I want to go to stocks that have not performed yet and maybe holding up additional capital. I'd rather reduce the risk, remove the stock, and add it to cash than wait around or potentially just wait for it just to stop us out. If it's headed there anyway, then, and sometimes that's the wrong decision. Sometimes, it's like that's that battle of, well, okay, so I finally decide to sell it, and then tomorrow it rockets 50%, right? How many times has that happened? It happens. It happens from time to time. We've got to just be okay with, what are we doing? We're managing the risk. How do I reduce my risk? I can remove additional stocks from the portfolio and move them back into cash. Okay, so some of these, you'll notice the wedge is a little bit bigger than others. So some of these stocks that have started to move, let's see, I've rebalanced these quite a bit. GCT, it's up 3%. We really don't have anything that's much bigger than 3% right now. 3% there. OSCR is almost 3%, 2.7. So we've got a couple along here. We'll continue to keep an eye on, and as they continue to grow, what we can do is we can peel this back. Okay, and let me explain what I mean by that. Let me pull up. Let's go to one of these 3%ers. If I want to just continue to let this stock go higher, but I don't want it to get much higher than 2.5%, then I can keep adjusting the number of shares. It's at 3% now. I can sell shares to pull that number back to 2.5%, and it goes higher, and I sell more to pull it back to 2.5%. So I'm maintaining that 2.5%. That's the profit target strategy for it, but that's one of the ways to be able to realize gains on winners. That is less aggressive. The more aggressive approach is to just let it run, just let it go, and even potentially add into some of the winners. But in this case, well, we're not going to do that, but that is an option as well. And that's essentially what we want to do now, is we're managing these holdings. We've got 20 holdings. Sometimes we get up to about 30, but usually it's right around 20. That's a good number, 15 to 20. And so we're sitting right around there. We'll see which ones keep working. If we start to get stopped out of some, I may start to whittle back some of these that have not been performing. Some of them are starting to wake up in the last few days, but NXE has yet to. That's one that I may give another day is all. So cleaning out the portfolio, the spring cleaning, where do you start? Start with your losers. Start with your time stop stocks, the ones that haven't moved yet. And on the winners, you can just rebalance by adjusting your positions from however that is. If it's anything higher than 2.5%, you can always sell the shares to pull that back to 2.5%. Just think of it, this stock as, it's a worker. It's out there working. It's doing its thing. It's growing. It's providing additional gains. There's times where I want to take those gains and I want to put them back into this pile. I want to put them into the cash pool. Okay, now notice what's happening to the cash pool. It's 60,000 now. This account started with 100,000, and we've got 60,000 in cash, and we've got 50,000 in holdings. So our cash level is also increasing. Now that's conservative. We don't have to do that. If we wanted to be more aggressive, the way that I would do that is I would take on a larger position. I might go to 3 to 3.5% of this, because that's going to make these pie slices a little bit bigger. Probably not that big, but I'm going to end up adding more a larger position of this pie. Okay, so if you want to increase the additional potential, it's the reward and risk. You're going to make more money because you have a bigger position, but you're also going to potentially lose more because you have a bigger position. So if you want to take a little more risk than we're taking, this is the way to be able to do that, bumping that up 3.5, 4, maybe even 5% as positions are starting to work. I think the market conditions right now are not, they're just not prime for that big of a position. Earlier in the newer bull market, we can do that. But also, I don't want to change too many things. I want to just keep it consistent. I want you to be able to be comfortable and feel what that feels like to have a winner, to have a loser, and what that process does in terms of your mental state. Trading and money is such a mental thing. At least it is for me. It probably is for most people, because we want to have growth. We want to have increase. I think deep down we want to have, you know, a million bucks in the account. We want to turn that small amount into a large amount, and it's entirely possible. But you have to take a certain level of risk to be able to do that. And with risk becomes volatility. So I've got to be okay with larger drawdowns, larger swings in this of 2, 3, 4, 5% potentially per day to the upside, to the downside, as we're taking larger and larger pieces of the pie. Okay, so just a little continuation of portfolio management ideas, how to be able to adjust those. It really is not that difficult to manage it. It just takes a little bit of time each morning to be able to make those adjustments. If you want to join me in the muscle wheel portfolio, where we actually do make the trades, I do a video each morning explaining the pick, the allocation, where we're adjusting stop losses, how we're adjusting, what we're selling, then I'll add a link in the description of this video for you to be able to access that. And I'm going to end on that note. I appreciate everyone's time and effort, and have a fantastic week. See you next week, and enjoy the weekend. Thanks a lot. Bye now.